Hi everyone, hope you're doing well. Today we've got a Sunday video for you guys. Not often do the Sunday videos. When something big happens, I make the videos on Sunday, and today we're going to talk about it because there's big news out. I'm sure you've seen it all over the weekend with what's been going on between the Iran and US after the US targeted one of their nuclear sites and obviously pretty much destroyed it. No way to describe it more than that. So yeah, we're going to talk about that, what that could have impacts for the stock market wise, and then a couple of other things towards that's going to happen this week as well. So a little bit of a week preview for you, and also what potentially could happen going forward with the stock market, with everything that's going on. So first of all, let's start about what happened over the last 24 hours, which is obviously the situation with Iran. Obviously, the US has dropped a bomb on one of their nuclear sites at the moment, and that's obviously escalated the situation after what has been, those negotiations have clearly not gone that well. That the US has then obviously gone and destroyed one of these nuclear plants that they've currently had, where they believe Iran are currently building a nuclear weapon. Now, I think when we look at this news here, are we going to see a stock market crash because of this? Probably not. We've seen a lot of conflicts in the last 12, 24 months recently, and any of these geopolitical tensions haven't really caused a big drop in the stock market. I think there's always the potential that maybe we get a 2 or 3% dip, but anything more than that, when we're talking 10, 20%, I don't think we're going to get a stock market crash off this situation. The only thing that might escalate it from like a, 2, 3% dip into maybe like a 6, 7% dip is depending on what Iran do as a response. I think that's what you're looking at. If Iran come out with a big response, and maybe I think there's a couple of military bases quite close that the US have. Maybe Iran try attack some of those military bases. Iran don't really have the power to cause anything like what the US have done to Iran. So their response would will probably be a lot more limited. Potentially, I think there may be other ways that they potentially could cause some issue to the US, but the issue that I would expect them to respond by, that might escalate it. Where if it's a direct attack on the US, then that might obviously the market might drop a bit more of that. So yeah, really overall, I'll be honest with you, I haven't seen much impact from geopolitical tensions, so I would only expect a 2-3% drop. And I think the only way that this drop escalates anymore is depending on the Iran's attack. The only thing that I would say is, obviously we don't have the pre-market data, but the only thing that I would say that could cause the biggest issue at the moment is oil prices. So oil prices are shooting up. I would expect them to shoot up again in the next 24 hours. And obviously when a lot of countries at the moment are battling away with inflation, and they want to get that inflation figure down. A lot of them want to cut interest rates, especially like the UK, for example. They obviously want to cut interest rates with the economy collapsing. The US is showing signs of weakness right now, and Jerome Powell does not need another excuse on why he's not cutting interest rates. But if they see oil shooting up, that might be the newest reason for them not to cut interest rates. So that could be maybe the biggest knock-on effect, is that you see inflation start going up, a few prices going up, and then the interest rates don't come that we are hoping for. Well, it seems like they're not going to come anyway, but that could actually be the longer term bigger effect, I think, from this sort of situation here. So we'll see what happens. Ultimately, if we do have a 2-3% dip, that'll be okay. A bit from a selfish point of view, if we were to have a 5-6% dip, that would be a lot better, because if we were to have a 5-6% dip, what would probably happen is a lot of individual stocks would actually probably dip like double that, 8, 9, 10%. And if that was to happen, that would actually present probably a few buying opportunities. One that stands out to me is Adobe. I really want to buy Adobe. I've just done a review of their earnings on Patreon, so if you're a Patreon member, guys, go check Adobe earnings video out on Patreon. But if it gave the chance to get Adobe like 10% cheaper, that would actually be quite interesting. Google, I've kind of like given up a little bit on buying Google at the moment after trying to buy it for a while. It's just had a little bit of a bounce out really since it's like April lows, as we can see here. But if it was to have another 10% pullback, it would be right back into my buying range where I could go buy Google, which would be really nice, because being relatively short on stocks to go buy at the moment, to be fair. On the US side of it this week as well, on earnings, worth pointing out, we've got Carnival, FedEx, which is always a good indication of the economy. But we have Nike as well reporting, which is going to be interesting to see how that turnaround is going on with Nike, because every quarter we keep coming to is that people keep saying, "Oh, this is the time that we're going to see Nike turning around," and it never turns around. So yeah, I'll be interested to see that one because at the moment the numbers have been very poor, and we'll see if there's some signs of life finally kicking in on that one. I potentially will cover Nike on either the YouTube, potentially if it's really interesting, or I might cover it on Patreon if you guys want to see it on Patreon. So that might come up as well. And on the UK side, there's a couple of interesting ones actually coming on the UK side. S3 is an interesting one because that's a recruitment stock, and a lot of their recruitment and staffing stocks have been absolutely crushed. I mean, one of the favourite ones on the Discord at the moment is Robert Walters. But I was listening to Paul Scott and Paul Hill, if you watch their video on Vox Markets that they do every week. And them guys were a lot bigger on it on S3 rather than Robert Walters. And this one's had a pretty significant pullback, as you can see here, especially since like July time. I mean, the stock's nearly lost half its value. 6 times earnings, 6% dividend yield. And yeah, they're reporting actually on Tuesday. And what you compare, I mean, look at Robert Walters, by the way, if you want to see how much them guys have kind of fallen down since 2021. But with the Paul Hill and Paul Scott, they made a good point about S3 versus Robert Walters. If you were looking for a turnaround play in like the recruitment space at the moment, is S3 is actually still remaining profitable compared to Robert Walters. And the thing with S3 is that as well as being profitable, the balance sheet's a little bit stronger as well, I would say. And if we have a look at S3 at the moment, yeah, I mean, obviously, the thing is you can't really use the P ratio because the profit is about a drop a ton. So it's actually around about 16 times earnings. But if you look at S3 and if they're able to get back up to like the 40, 50 million in profit, wow, the stock is, certainly going to be doubling up from that point of view. So recruitment stocks are very much talked about at the moment as a bit of a turnaround, and I'll be certainly looking at S3 when they report their earnings this week and seeing if that's an interesting one. Gear for Music are reporting, obviously we talked about Carnival as well. Max Electric are reporting, Halfords are reporting, Lion Trust are reporting. Catebox, you know what, we've not heard from Catebox for a long time, so I've been like oohing and ahhing about what I do in my Catebox position, so it'd be really good to get an update about what's going on with that one as well. And then obviously Moonpig. I used to own Moonpig, and you sometimes forget all these stocks that you used to own and you make good money on it. Must have bought Moonpig in like 21, 22, and the stock just shot up after I bought it, like literally like 6 months of owning the stock. I ended up selling it for like a 50% gain or something and just walked away from it. But I always look at it because I think in the long term, Moonpig is a company that could do quite well as we just see more of the younger generation coming through. They're like the ones that are more likely to go on and online and buy gift cards and send presents, and then they don't have to leave the house, and as well as that, like the reminder system they have of birthdays as well, like get an email through from Moonpig, and the email notification says, "Oh, just to let you know, this time last year you bought a card for someone called Dave. Do you want to reorder a card? Here are the designs." And you go, "Oh, it's Dave's birthday next week. I'll just order it through Moonpig and send it through again." That could do really well for them in long term, and that's me saying that as a Card Factory shareholder, which I probably shouldn't be saying that. So yeah, next week overall looks quite interesting. We'll see what happens. We'll see what happens with the markets. I personally can't see it dropping more than 2 or 3%, to be honest with you. The only way I see it escalating more is if there's a big retaliation from Iran, which I'm not 100% sure that's going to happen. But like I said, if we have a 2-3% drop or even a 5-6% drop, I'll be staring at these stocks because these individual stocks will drop more than index, and I'll be welcoming some buying opportunities out here because I've been last 3-4 weeks I've been staring around like I have no idea what I want to buy at the moment. So we'll be keeping an eye on that one. Obviously Nike's numbers are coming this week. That'll be really interesting. As how's that turnaround play going on at the moment. And then on the UK side of it, a few interesting ones with Catebox coming up, which we've not seen for a while. I'll be checking out S3 because the recruitment stocks are starting to take my interest a little bit at the moment as a bit of a turnaround play. So I'll be seeing what them guys are doing, and a couple of ones as well. So let's see how this week goes on, and hopefully you enjoyed the little preview, guys, and yeah, I'll see you on Monday.